Hello, Raghee. Welcome back to F.A.C.E.
How are you? How are you? Great to be
Good,
back. Great to be
good,
back.
Raghees. Great to hear your voice. You know, we have to correct in 2020 how much time elapses between our conversations. What do you say?
I'm game.
All right,
I'm your Huckleberry.
I knew you were going to say that. Yeah, that's Val Kilmer's greatest line anyway. To share your screen, there's a little green box on the drop-down menu.
You got it. All right. Let's see. Which screen shall I share? All right. Here we go.
Your best one. All right. So, okay.
I think that's just the one in front of me. So
Okay, that's fine. You know, Raghee, for people that, you know, really may not be familiar with you, and, you know, I consider you one of the pioneers for, you know, breaking the glass ceiling for women to come into the trading business. And, you know, you led the way for, you know, a lot of women looking into this and doing this now. So you're a trailblazer.
oh gosh, I'm just a trader. There's a great quote by Lynn St. James, the only woman to won the I think it was the Indy 500, and she said she loves racing because the car doesn't care if she's pretty, has a nice smile, is a man or a woman, and I kind of feel the same way about the markets. It just doesn't care.
It doesn't. It doesn't care. You know, it doesn't care what we're hoping for either. So, you know, I say that hope is the oxygen in life, but the carbon monoxide in our trading. So I remember, and I want to just acknowledge, I believe last time you were on was, you know, well over a year ago when Bitcoin was making its parabolic move to 18,000. You were in there early, and want to acknowledge one nice ride you had.
Gosh, I think like a lot of purely speculative trades like that was something, that was a position I built going into the 2016 elections. And around the same time, they were confiscating rupee in India. And I remember my cousins and my nephew saying, yeah, we're buying Bitcoin. I said, you're buying Bitcoin? Back then it was trading at about $400 to $500. And I said, okay, it's a currency, right? I don't care if it's digital or Forex. To me, it was just digital Forex. I'm like, okay, I'm game. So it wasn't like I had a big faith in it. I just realized there was flow. I think like a lot of us trading, there was just interest, there was attention, there was flow. And, I'm a trader. I follow the flow.
Yeah, and you know, a lot of people weren't as aware of it when, you know, it was a difficult time for India when Modi did it, because India was very much a cash and carry type of economy, right? So, you know, you look for things like that to see how a population would adjust to that, because, you know, that experiment can happen again anywhere, right? War on cash, etc. So you follow the flow. So looking at the flow here on Euro Yen, you want to talk about that? Looks like we're attacking. What is that dotted white line? Does it represent a moving average?
Yeah. So basically, I like Euro Yen. I really like, right now I'm focusing on dollar buys. We've been dollar long since last October. Yen is getting added to that, because when I think about what the strength currencies are right now, what currencies would I be okay with being long, not just today and tomorrow, but weeks, if not months from now. I think the yen is second to the US dollar. So I also look at Christine Lagarde and what she's been brought in to do, which is basically clean up what's going on in Europe. And I don't think there's any chance the euro really gains on the US dollar or the yen in any meaningful way longer term. So corrections like this, I'm absolutely game for shorting into. Now the white dots, sure. So all the indicators that I've got here, this one I'm just playing around with, so don't even worry about the one at the bottom there. All the indicators that I have are available free in TradingView. So none of this is me hawking an indicator. This is what's known as the
You're
propulsion.
not a hawk, you're an eagle.
Depends on my mood. So sometimes what we try to do is think about reimagining indicators and ideas that already exist. So one of the things that I like to do early on in my career was look at exponential moving average crosses. And it can be technically messy to watch two moving averages intertwine with each other until you finally get a clean signal. So what we did is we basically said, well, what's going to be the filter, if you will, to kind of clean this up? And we realized it was going to be price. We can input a short exponential moving average length and a long. And essentially, when the 8 and 200 interact with each other and then interact with price in a specific way, those dots appear where the longer exponential moving average would be. Now, again, if you go to, this is on TradingView, obviously. If you head on over to TradingView and just look under indicators and strategies and type in Simpler, SIMPLER, you'll see that the propulsion dots right there, there's no little lock. They're free for you guys to use. The grab candles are the other ones that I'm using, again, free to use. And then we sort of reimagined Nicholas Darvis, his work, and the Darvis box. So that's the other thing that I have running on
That's
this
a new name to me, Raghee. Would you mind describing his work a little bit or talk about him at all?
Oh,
I'm not familiar with him.
Sure. So Nicholas Darvis gained popularity by a book, but I believe it's titled "How I Made $2 Million in the Market" or something along those lines. I can look that up on Amazon. I read it many, many years ago. It's published in the 60s. So this is pretty, he's a self-taught investor. I don't even know that I'd call him a trader. And he wrote a book, I believe it was called "How I Made $2 Million in the Stock Market." He was born in Hungary. And he was a dancer. And one of his gigs as a dancer, he was paid in stock. It was Canadian Railway stock. And he just put it in a drawer. He wasn't an investor. He just thought it was, whatever, garbage, and he just hung on to it. He pulls it out of his drawer sometime later, realizes that it's made him quite a bit of money, and he thought, okay, I got to learn what this stock market is all about. And then he basically, in essence, became sort of a momentum trader. So momentum to me means, are you looking for a market to break through, higher through or lower through a particular threshold? You're kind of a buy stop entry kind of person, sell stop entry kind of trader. And he played momentum, typically like 52-week highs. Now, that's obviously something I think you could do in the 60s and 70s. I think the markets are entirely too transparent and sophisticated now to have something like that, but he was onto something. And he automated support and resistance, maybe unknowingly, by using a pattern called a minor high and a minor low and a certain candle count in between. So we just automated all that. It's almost like looking at little breadcrumbs on a chart for key turning levels.
Wow. So, I mean, you're doing a lot of coding there. You work with the people at Forest Park FX to do some of this stuff?
I am a huge fan of what Justin and his team are doing at Forest Park. They are just, look, in my room, we talk about Forex and futures, and Justin is our, as I like to call him, our consigliere in the Forex space. So yeah, we're huge fans of what they do over there at Forest Park. I've done things with Justin before, and I absolutely recommend folks work with him. So as far as coding goes, I actually can code in Pine Editor. So that's one thing. I never wanted to be completely reliant on an outside coder. So I can code in easy language, ThinkScript, Pine Editor. Not great, but enough to get the job done.
Yeah, I mean, you're a renaissance. I know you don't trade.
I'm a control freak.
Okay. All right. Well, maybe it takes that type of personality to be successful in the market. So let's talk about what you're seeing here in Euro Yen. So you're talking about most likely a risk-on environment continuing for some time. And if you're positive on the yen, does that mean that we could be looking for the correlated asset yields to be heading higher as US dollar yen heads up?
So currencies to me are a much cleaner space than, say, stocks in some ways. Now, I trade stocks and futures and Forex, but what's happening right now is kind of interesting. There's a complete and utter just blind eye to the macro environment right now. And I could get very salty and talk about the macro environment that I shorted last October and played until Powell put in his V bottom on January 4 with the world's most epic flip-flop of any central bank that I know of.
Yeah, the worst
And
December since 29.
look, Powell's red phone in his office somewhere started ringing, and his buddies were saying, look, credit's freezing, credit's frozen. Banks aren't lending to each other. We're seeing that again, hence the repo, the lender of last resort. The Federal Reserve is getting active. Is that what we see in a healthy economy? Of course not. Do we see $60 billion in not QE? Of course not. In fact, if you take a look at the St. Louis Fed data going back to July of this year, there's a distinct V bottom also in the balance sheet. So they've been adding to that balance sheet aggressively since July. And I'm sure a lot of your listeners already know all that.
What do you think? Do you have any kind of theories or gut feelings about what it is really about that banks will pay out that much for overnight?
Way, Coach, if I may interrupt here, so far what we know is that the balance sheet has increased by almost 300 billion in 2 months. So, the 60 billion not QE so far has proven to be more or less 150 billion per month not QE so far.
I'd like to introduce you to Steve Volge, one of the partners
Hello.
here.
Hi,
Raghee.
Steve. Hi, Steve.
Yeah.
I was listening to you earlier. Great stuff.
Yeah. So do you think, do you have any beliefs or ideas? I mean, they try to push it off as there were big quarter-end corporate tax payments, and the Fed hasn't really explained what's behind this except what they're doing to ameliorate it. Is there a bank with a big derivative problem or something out there that we don't know about that you have a feeling about, Raghee? You've seen everything.
Well, I think that and I don't know of any specifics, but I think we can kind of put our finger to the wind and know that a few things. Number one, we know the data that the Fed cites, whether that be inflation or growth, is data from some moon circling Jupiter, certainly not from Earth. We know that the BLS data peaked in August of last year in terms of inflation. So we had peak inflation in terms of last year's BLS. We know that we're probably going to get less than a full point of GDP moving forward. I'm not one of those people saying that we're heading for a recession. That's not tradable. At the end of the day, we could talk about macroeconomics all we want. It's a very engaging narrative. We take a look at a rate of change of money supply.
Doesn't make you pips.
It doesn't make us pips. It doesn't make us points. It doesn't make me ticks. But what I do know is when I take a look at, whether it be the S&P or the NAS, the Dow, for me, a lot of the reason the euro yen comes up is I get a lot of folks asking me about dollar yen.
Yeah.
And I actually don't want to play dollar yen because I don't want to pit two strong currencies against each other. I know right now the dollar's gaining against the yen, but I'd feel a whole lot more comfortable playing something like Swiss yen or euro yen and know that I feel that Swissy is probably not going to be gaining strength. It's been wishy-washy, but euro is probably my favorite. So going forward, if we do get that big rollover in the broader averages, sure, I want to short things like the communication sectors and discretionary and anything that's generally speaking high beta, high momentum. But if I can get long yen and stay long dollar, just not against each other, that's really where on the currency side of things, I want to position myself. And I want to be long dollars. We like I said, I have been now for the better part of 12 months. And, looking at the Euro US, I won't be backing off that anytime soon.
Okay. Yeah. All right. And you know what? I was talking about this morning, Raghee, is, I want to give the break that the dollar had the benefit of the doubt that, maybe we're into a corrective period. We have to take out that 97 level for that to happen. But the action like you're showing in the euro right now is, we had two retests, the first breakout at 110 and then pulled back to 110, but it just doesn't seem to have any velocity in it. And it's so quiet that I'm, conflicted about the dollar. So you think this bounce in euro is another failing rally and we're not going to take out that white dotted line? Is that your bias?
Correct. I mean, I think we could test it. That's the 200 exponential.
Okay.
I think we could test it and I'll short it all over again. Now, here's where, this is where choosing your instrument makes a difference. Primarily, my positions in currencies. Well, not just trade selection, but also, for example, primarily I'm going to be shorting the euro US. I mean, that's still the main and will always be the main marketplace for currencies, but I'm not against buying puts in the 60 euro FX. I'm not against buying F.A.C.E puts, getting long puts either. So typically in this area, I'm going to be 80% short euro US, but another 20% I'll be in some of these derivatives. So the closer we get to 112, the closer we get to that 200 exponential, I absolutely want to be a short seller. And really, I'll be willing to build positions into this probably as aggressively as 1150.
And what's your line in the sand? Closes above this resistance?
My line in the sand is, you know, this is going to sound crazy. I almost don't have one. I'm willing to take a lot of heat. I don't want to take a lot of, so this is where you get in is going to be a really important thing.
Because I actually think there's a chance for 114 if we crack that white line you have.
Wow. So my theory for anything I do with the euro is this. If I want to be a euro bear, I have to be equally a dollar bull. And if I think that the euro is going to go to 114, I better have a very good narrative, not just for why the euro could be bullish, but why we would see a significant sell-off in the US dollar. So if I can manage that kind of
you
narrative
can't come
in my
up,
mind,
there is no narrative for a weaker dollar.
I can't find a narrative for a week. I mean, sure, there certainly could be, but I can't find a narrative for that pronounced. You know, we're talking, say, 3 handles from where we are right now. I can't find one. Not that it could happen, but I can't find one. And therefore, I feel pretty confident about the euro US staying below the 112 handle.
Okay. You on any of the commodity markets have any interest to you? I mean, crude has been a very difficult trade. Just the example this week, Raghee, of a lot of people had an up channel, and then it looked like it was we had a breakdown day, and then it negated everything yesterday.
Sure. So we've been fading crude mainly when we get. So this is what I would consider, for the most part, a distribution market trend. You know, in the Charles Dow way of looking at things. This particular wick, of course, we know was the drone strike.
Yeah.
And I am still short crude. I'm still going to continue to short crude. However, this is an interesting one. We have been in what I call a D-stage economy macroeconomically for a while. And we're going to be, I think, slowly, especially because of the printing, transitioning to a much more bullish environment for commodities. Now, I know OPEC is not expected to be increasing the production cuts, although compliance is high in both OPEC and OPEC plus.
Does Saudi IPO coming up play into this at all?
I think Aramco is never going to happen. I think two things are never going to happen.
Aramco, a trade deal and Aramco.
Exactly. And this is not very ladylike, but I like to tell folks, monkeys will fly out of my butt before that happens. You know, again, not ladylike, but I want to
stay away from the zoo. Stay away from the zoo, Raghee. So
Aramco already canceled their U.S. tour and their London tour.
Okay.
So where is this thing going? I think there. I could be wrong, but how many times have we seen this? This Aramco merry-go-rounds come back?
40 years.
Yeah.
Anyway, so that red area at 60, I actually have a descending triangle line coming up there. You regard, if we get up there, to be a decent shorting opportunity because this is massive distribution for about 6 months or so?
I would prefer crude stay below 58, ideally. And if it gets down to 54, I'll take my profits on my shorts that we've built from about 60 and 58. And then what I want to do is actually start getting long crude.
Okay.
Long crude and long RBOB.
You think that 50 level, which is, tested a couple times, is going to hold?
Yes, 52 to 50 and a half. I'm looking for it to hold. I'm looking for a lot more bullishness in commodities, generally speaking. I know it doesn't go with the narrative right now, the supply glut, and also the lack of demand. We know that EIA, IEA, and OPEC themselves have said 2020 looks to have lower demand, and we obviously have a global economic slowdown, regardless of what all the central banks want to lie and tell us. But I actually think there's a narrative for bullish crude. And my next move after the sell-off is going to be start to build a long position.
Okay, and since you brought up commodities, gold, bear market rally or the beginning of rebirth of the bull market or a continuation of the bull market?
Well, so again, this is where I'm kind of biased, and this is where, give me one moment here. This is where I'm biased. I've been long gold since the end of 2018. Again, when we started seeing what was happening in equities, the rollover in equities, and gold bonds and the US dollar were the trio of markets. So right now, gold, like bonds, is in a distribution market trend. But kind of going back to Dow theory, Dow would believe that you really want to continue to respect how we got to chop. In other words, if we rallied to distribution, kind of favor the long side. If we sold off to a choppy market, favor the short side. So I'm still looking for oversold buys in gold. We're long gold from the 1455 area. And I'm just looking for the market to pop back up to maybe 1520. It doesn't clearly have the structure that we saw in June, July, and August. It's not that same uptrend, but I'm not looking to short gold. I still believe in a long position in gold, and that's really what we've been doing. So I'm still very bullish in gold.
Okay, nice look on that. The gold silver ratio looks like it turned. You do anything with that? Because, you know, I know, Raghee, you could remember when the gold silver ratio had kind of a mean of 40. So even though we've come down from 93, 94 to where we are now, 86-ish, it still is a very high number of gold being preferred over silver. At 90, you know, you just drop your Krugerrand on the table and get 90 ounces of silver.
As far as, you know, I'll tell you, I have not been really keeping an eye on silver.
Okay.
I don't have a position in silver. You know, most of what I've been focusing on is sort of treating gold as the currency that I believe it really is. It's just kind of an extension of what I look at in the Forex markets.
Okay.
And so, you know, with that being said, yeah, I have not. Silver is kind of a widowmaker sometimes. Kind of reminds you of natty gas. You think everything's going along just fine, and then all of a sudden, you know, it just whack-a-moles you. So, but most of what I've been doing is kind of this gold bond US dollar trio.
Okay. And so bonds good, gold good, and dollar good, and no reason to change the view on these trends that have been in force for a while.
So yes, I think that ultimately, as we see what's happening in the economy, looking at bonds, looking at gold, looking at dollar, you know, we're talking specifically about some Forex moves. That's why I'm as bearish as I am the euro. But I do want to be long dollar bonds and gold. And again, that's been 12 months. And I fathom that 12 months from now, I'll be talking the same thing.
And do you think there's potential for, in the stock indexes here, for at least a top with maybe a 5 to 10% correction? Or are you looking for...
That's the question, right? When does the equity markets, when do they come to their senses?
Point.
I don't see any time soon. Look, I think that anyone who underestimates what a political body the Federal Reserve is, and I don't mean just this one. I'm talking back to Bernanke, certainly Yellen. Yellen basically did the most glacially paced series of rate hikes in the history of ever. To say that wasn't politically motivated is just ignorant. So they're all political bodies, and they all want to keep their jobs, and they all want to keep the Fed relevant, because obviously battle cries for destroying the Fed they're always out there.
Well, I know Super Bulls are talking 4,000, 4,200 in the S&Ps.
I would have to say it's going to be very difficult to see this market pull back in a significant way until after the election. There's too many folks who will want to see otherwise. Now, of course, things can happen that are unforeseen. But as long as we keep the buybacks going, let's face it, why is the S&P and the NASDAQ up the way it is? It's because of the buybacks in Apple and Microsoft, right? You're seeing 3 years consistently of the largest buybacks ever in these stocks. And these
don't you see a danger in that, though, Raghee, that the corporate bond market is something that a lot of people are looking for to get the canary in the coal mine, that they borrowed money not for building plants or hiring, they used it for buybacks and dividends. Isn't it like they own their own company on margin?
The question is, are the buybacks dangerous? And regardless of how it's being funded, the buybacks are dangerous because they're not reinvesting in technology. They're not reinvesting in their employees. I look at it in a much more basic way, where it's just, this is not doing anything to improve the value of the company. It's just reducing float.
Yeah, it was a great tax cut, right? Yeah, so that's what it's doing, reducing float. Raghee, what's the best way? And I know that, you know, whoever was here and whoever sees this video later is going to want to keep tabs on your views, because, you know, you're one of the best out there, Raghee.
No, I appreciate that.
Thanks. You know, I've interviewed over 1,000 people. So, you know, after a while, you know who knows. And I'm glad to call you my trading warrior sister. And thank you for edifying our community today.
No, I appreciate the time. And of course, my pleasure. So I guess the big idea is I want folks to understand that the largest market that can tell you so much about what's happening in commodities and stocks are currencies. So to me, I kind of come from this background of what are currencies, what are commodities, what are macroeconomics telling me? And sure, that's going to play out in the stock market too, which relatively speaking is tiny compared to the world that we typically occupy in Forex. So ultimately, even though I do execute a lot of trades on futures, I do think that futures and Forex are very intertwined. And I do all this analysis over at simplertrading.com. And so, you know, people want to hear what I'm looking at, the tools that I use and so forth. Yeah, it's over at simplertrading.com.
Okay, well, thank you so much for being here, Raghee. I hope you have a great holiday season where pips rain down on you and people that work with you like a blizzard.
I appreciate that, my friend.
All right, so thank you so much, Raghee. I appreciate it, and I learned from you. If I did, I'm sure other people will as well. So again, much success in every area. Okay.
Thank you, my friend. I appreciate that.
All right, everyone. Raghee Warner, your website one more time, Raghee.
It's simplertrading.com.
Okay. All right, everyone. That's a wrap for Thursday. See everyone for TGIF. Remember, don't just count your pips, count your blessings. And I'll see everyone down the road tomorrow. Adios.